Nigerian current surplus surged by $5.28 billion in the second quarter of 2025, up from $2.85 billion in the first quarter of 2025, reflecting stronger external sector resilience and improved foreign exchange inflow. The Central Bank of Nigeria disclosed this in a frequently asked question on its official website, noting that gross external reserve also rose to $43.05 billion as of September 11, 2025, providing 8.28 months of import cover. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. The Central Bank of Nigeria stated that the growth in the external reserve serves as a source of confidence to citizens, foreign and local investors, and other economic agents. The Apex Bank attributed the improvement to sustained exchange rate stability, tighter monetary policy, and moderation in petroleum product prices, all of which have contributed to a more favorable balance of payments outlook. According to the latest reports, Nigerian external reserve have surpassed the $42 billion mark as of Thursday, September 25, 2025, the highest in over 6 years. According to the latest data from CBN, the country external reserve has increased by over $692 million in 18 days. It also shows that the reserve has been on the upward swing since 14th of July 2025. The closest external reserve has gotten to the present figure was on September 27, 2019, when it hit $41.992 billion. CBN reduced CRR to tighten control on public sector deposits. The CBN FAQ also explained while the Monetary Policy Committee recently reduced the cash reserve ratio commercial banks from 50% to 45%, noting that the reduction seeks to ease the liquidity burden on commercial banks, thereby providing more rooms for productivity, lending, and intermediation to counter excess liquidity from public sector, according to outside the Treasury single account. The NPC also introduced 75% CRR on non-TSA public sector deposits. This measures ensures that these deposits do not contribute to inflationary pressure, which could undermine the current momentum of this inflation. Despite the adjustment, the CBN assures that account holders will retain full access to their funds, with commercial banks equipped to meet all legitimate obligations. The CBN emphasized its commitment to balancing inflation control with support for the real economy, particularly the MSMEs. The bank reiterated its role as a lender of last resort, providing short-term liquidity support to commercial banks through its standing lending facility. This ensures that banks can meet customers' obligations while maintaining systematic stability. Still on the Central Bank of Nigeria, banks' deposits with the Central Bank of Nigeria grew by 568.7% year-on-year to 146.13 trillion naira in the first 9 months of 2025, from 21.85 trillion naira in the corresponding period of 2024. Reflecting on the enormity of the idle cash in the banking system, the CBN has two short-term lending windows for banks: the standing lending facility and repo lending. It lends money to banks through SLF at interest rate of 500 basis points above the monetary policy rate, and it also lends money to banks through repurchase arrangements, which involves the purchase of bank security with agreement to sell back at a specific date and usually for higher price. On the other hand, the CBN accepts deposit from banks through its standing deposit facility and pay an interest rate of MPR minus 100 basis points. Analysis of the data by Central Bank of Nigeria shows that the bank deposit via the standing deposit facility rose sharply by 158.4% quarter-on-quarter to 49.68 trillion naira in the second quarter of 2025 from 19.22 trillion naira in the first quarter of 2025. This trend continued in the third quarter of 2025 with banks deposits with the Apex Banking rising by 55.4% quarter-on-quarter to 77.23 trillion naira. The continuous strong patronage of the SDF reflects excess liquidity in the banking system and the effect of the CBN shift to a single-tier remuneration structure for the SDF last year. However, banking borrowing from the CBN via the standing lending facility fell by 12.4% year-on-year to 69.37 trillion naira in the first 9 months of the year from 87.09 trillion naira in 9 months of 2024. The decline in the bank borrowing from CBN indicates banks dependent less on the Apex Bank for short-term liquidity needs. Analysis shows that banks borrowing through the SLF rose by 61% quarter-on-quarter to 50.46 trillion naira in the second quarter of 2025 from 9.38 trillion naira in the first quarter of 2025 and in third quarter of 2025. Bank borrowing stood at 10.67 trillion naira, representing a 78.8% quarter-on-quarter increase. The federal government of Nigeria recorded investors' appetite at its September bond auction as subscription crossed 1.26 trillion naira, far exceeding the 200 billion naira initial offered. According to the Debt Management Office, the auction conducted on September 29 featured two reopenings: the 17.945% FGN August 2030 a 5-year bond and 17.95% FGN June 2030 a 7-year bond. Both bonds were settled on Wednesday, October 2nd, 2025 for the 5-year bond maturing in 2030. The government offered 100 billion naira but received 66 bids worth of 231.979 billion naira. Out of these, 26 bids were successful with an allotment of 87.80 billion naira at a marginal rate of 16.00%. The 7-year bond maturing in June 2032 witnessed even stronger demand as 270 bids valued at 1.03 trillion naira were submitted against the 100 billion naira offered. A total of 91 bids were successful with 488.83 billion naira allotted to marginal rate of 16.20%. Despite the allotment closing at lower marginal rates, the DMO confirmed that original coupon rate of 17.945% for August 2030 bond and 17.95% for June 2032 bond will be maintained. In all, the government raised 576.62 billion naira from the auction, underscoring robust investors' confidence in federal debt securities despite high interest rate conditions. This auction result also highlighted a growing preference for longer dated instruments, with the 7-year bond attracting over 4 times the subscription of the level of 5-year note. Analysts noted that the heavy subscription demonstrates sustained demand from pension funds, banks and asset managers seeking safe and attractive yields amid volatility, equity and currency markets. The Nigerian Pension Fund assets have surpassed the 25 trillion threshold, closing August 2025 as 25.89 trillion naira, according to the monthly data published by the National Pension Commission for July and August. The fund first crossed the 25 trillion naira mark in July when it closed at 25.79 trillion naira. The upward trend continued in August as the fund rose by 97.88 billion naira to 25.89 trillion naira. Combined, the pension fund grew by 1.26 trillion naira, that is 55.14% in the 2 months whose data were released, compared to 24.62 trillion naira as of June. An analysis of the August report reveals that the federal government security continued to dominate the investment mix, with allocation valued at 15.82 trillion naira. The bulk of this was held in government bonds, which accounted for 13.28 trillion naira, while treasury bills, sukuk and green bond made up the balance. Domestic ordinary shares remain the second largest asset at 3.61 trillion naira, followed by the corporate debt security at 2.23 trillion naira. Money market instruments attracted 2.41 trillion naira, largely through fixed deposits and commercial papers. Alternative assets also feature in portfolio. Real estate investments stood at 254.60 billion naira, private equities at 273.27 billion naira, and infrastructure fund at 241.49 billion naira. Mutual fund were valued at 226.49 billion naira, while supranational bond closed the month at 21.62 billion naira. By fund structure, RSA Fund 2 retained the largest share of assets with 10.90 trillion naira, while RSA Fund 6 stood at 389.15 billion naira and 181.23 billion naira respectively. Membership of the contributory pension scheme was reported at 10,882,661 as of August 2025, up from 10,796,862 as of June 2025. The appreciation in the pension fund comes amid the issuance of guidelines by the regulator aimed at strengthening the pension industry. One of the regulatory directive custodian, respectively, PENCOM increased the minimum capital requirement of pension fund administrator and pension fund custodian to 20 billion naira and 25 billion naira respectively, with a deadline of 31st of December 2026 to meet the new capital requirement. Under the new directive, 3 categories were created, with Category A consisting of PFA with assets under management of 500 billion naira and above, who are expected to have a minimum capital of 20 billion naira plus 1% of AUM minus 500 billion naira. Category B comprises PFAs of AUM below 500 billion naira, who must raise their capital to 20 billion naira. Those in Category C are special purpose PFA, such as NPF Pension Limited, whose minimum capital was pegged as 30 billion naira, and the Nigerian University Pension Management Company Limited, whose minimum capital was fixed at 20 billion naira. PENCOM added that the minimum capital requirement for a new PFA license shall be 20 billion naira with immediate effect. For the PLCs, the minimum capital requirements had not been reviewed since it was established at 2 billion naira in 2004. PENCOM revised the minimum capital requirement for licensed PFCs to be based on shareholders from unpaired by losses determined by 25 billion naira plus 0.1% of assets under custody. Let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point on Global Television, where we extract the Nigerian economy and the government policies. Nigeria and China are set to deepen their trade and economic relations through 2025 edition of China Commodity Expo Nigeria, scheduled from Wednesday, November 5 to Friday, November 7, 2025 in Lagos. Organizer says the annual expo, organized by the Trade Development Bureau of China Ministry of Commerce in collaboration with Brightway International Exhibition, enjoys the support of various Chinese province, the Embassy of People Republic of China in Nigeria, and the Nigerian federal and state government. The 2025 edition is expected to host over 250 Chinese manufacturers and more than 5,000 business representatives. Chief Representative Officer of the Brightway International Exhibition, Muhi Ari, described the expo corporation audience, including importers and exporters, captains of industry, government officials, entrepreneurs. The 2025 edition comes amid rapidly increased bilateral trade, with Chinese custom data showing trade between Nigeria and China reaching 23.9 billion naira in 2022, including 22.3 billion naira in Chinese export to Nigeria and $1.6 billion in export from Nigeria. In the third quarter of the 2023, bilateral trade hit 17.25 billion naira, with Chinese imports from Nigeria rising to 22.5% year-on-year. From January to July 2025, trade reached $15.483 billion, marking a 34.7% year-on-year increase, making Nigeria China's second largest trading partner in Africa. Trade, the expo aims to attract foreign investment and venture capital, particularly among Nigerian youth, entrepreneurship, job creation, poverty reduction. China investment footprint in over $1.5 billion limited free trade zone and Ogun free trade zone, creating more than 7,000 jobs. Ojulari highlighted that the expo plays a significant role in promoting China-Africa economic relations, facilitating technology transfer and strengthening the mutual beneficial bilateral relationship. The event provides a platform for participants to access investment and developmental potential while enhancing business visibility and access to global supply chain through trade, investment, technology transfer, and entrepreneurial support. The 2025 China Commodity Expo is expected to contribute significantly to economic growth, job creation, improve standard of living, and poverty reduction in both China and Nigeria. Before we call it a wrap, let's take a look at the stock market. The Nigerian exchange closed the month of September on a positive note as renewed investors' confidence lifted the market by 178.99 billion naira. Market capitalization, which opened the month on Monday, September 1 at 88.41 trillion naira, with all share index of 139,722.19 points, closed on Tuesday, September 30th, 2025 at 90.58 trillion naira, with all share index standing at 142,710.48 points. Trading activities during the last session of the month shows remarkable improvement as total of 1.24 billion naira shares worth 29.82 billion naira were exchanged in 27,982 deals, representing 223% increase in volume and 157% rise in turnover when compared to the previous day's figure in aggregate. 128 equity participated in trading, ending with 28 gainers and 32 losers. UPDC led the gainers chart with 9.98% increase to close at 6.61 naira per share, followed by Nigerian MWell, which gained 9.97% to 38.60 naira. Eternal with 9.95% to 33.70 naira, and Aradel Holdings, which appreciated by 9.82% to settle at 615.00 naira per share. 1st of October 2025, on the flip side, Union Daikon Salt topped the losers chart, shedding 10% to close at 8.10 naira per share, while Champion Breweries fell at 7.09% to 13.75 naira. Royal Exchange lost 5.96% to 2.05 naira, and Wema Bank dropped to 5.56% to close at 17.00 naira per share. The sustained upward momentum reflected investors' appetite for blue chip stocks and improvement sentiment across key sectors of the market, positioning it for a stronger start in the final quarter of the year. Alright, this is where we call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.